The White House just dropped a bombshell on crypto, endorsing specific altcoins to buy right now. This rare government signal could spark the next major altcoin boom. Stay tuned as we reveal which coins the US is backing and why investors are rushing in for massive gains. The White House's 2025 Digital Asset Strategy. The White House released a comprehensive 180-day report on digital assets in 2025, framing digital assets as essential to the future US financial system. The strategy integrates regulatory clarity, market innovation, national security, and illicit finance prevention. It involves coordinated federal agency action to replace fragmented oversight with a unified regulatory framework. The report highlights blockchain infrastructure adoption, the rise of DeFi protocols, and stresses public-private partnerships to enhance security and compliance. It outlines clear classifications for digital assets and calls for legislative reforms to support innovation while protecting consumers and markets. Why the White House is now pro-crypto? The White House's shift toward a pro-crypto stance reflects the rapidly growing global digital economy and the strategic importance of blockchain technologies. Political leadership recognizes the potential of digital assets to drive innovation, create jobs, and enhance financial inclusion. Amid rising international competition, particularly from China and the EU, the US aims to maintain its technological and financial dominance. This approach also addresses economic challenges, such as modernizing the financial system and adapting to technological disruption. By championing crypto, the administration signals a willingness to balance regulatory oversight with enabling innovation, promoting the US as the crypto capital of the world and protecting national security interests. The role of new US crypto regulations and regulatory clarity. New U.S. regulations focus on creating clarity and consistency across federal agencies regarding digital asset oversight. The report supports legislation like the Digital Asset Market Clarity Act of 2025, which assigns clear authority to bodies like the SEC and CFTC, eliminating overlapping jurisdiction. Regulators are encouraged to adopt technology-neutral frameworks that treat digital assets fairly, reduce entry barriers for banks, and foster innovation without unnecessary costs. This regulatory clarity aims to facilitate lawful market activities, improve investor protections, and prevent misuse of crypto for illicit finance. The strategy encourages the use of regulatory sandboxes, safe harbors, and pilot programs to support innovation while balancing risk management. Key altcoins mentioned or implied in the White House Crypto Policy Report. While the report does not name altcoins explicitly, it emphasizes digital assets with strategic national importance, such as Bitcoin, as part of the Strategic Bitcoin Reserve. It implicitly supports altcoins involved in stablecoins, decentralized finance, also known as DeFi, and tokenized financial instruments, highlighting their innovation potential. The policy framework favors projects demonstrating regulatory compliance, transparency, and security, which could include top governance tokens, utility tokens, and interoperable blockchain platforms. The government's interest in a digital asset stockpile and promoting markets for responsible token trading suggests backing altcoins aligned with national financial and security goals. The U.S. government's plan to build digital asset reserves and its impact. The government plans to establish two primary digital asset holdings, the Strategic Bitcoin Reserve, also known as SBR, and the Digital Asset Stockpile, also known as DS. The SBR treats Bitcoin as a long-term reserve asset of strategic value held without plans for sale, signaling strong institutional confidence. The DAS manages other cryptocurrencies obtained via forfeiture, intended for law enforcement and victim compensation efforts. This initiative aims to solidify America's role in digital finance, create a financial hedge against external risks, and reinforce regulatory control. The reserve strategy may also affect market liquidity and pricing of key cryptocurrencies by introducing government-backed holdings. The involvement of regulatory bodies like the CFTC and SEC in crypto markets. The report highlights a more collaborative, defined role for regulators such as the CFTC and SEC. The CFTC is empowered to oversee spot markets for non-security digital assets, closing jurisdictional gaps and enabling more robust market supervision. The SEC focuses on securities compliance, registration, and investor protection within crypto markets. Both agencies are encouraged to use their authorities to foster innovation, issuing clear guidance on custody, trading, and record-keeping. This dual-agency approach balances market integrity with growth, encouraging new financial products and services while combating fraud and illicit activities through coordinated enforcement and regulatory cooperation. How institutional support influences altcoin price potential. Institutional interest plays a crucial role in elevating altcoin price potential by driving major capital inflows and liquidity. When institutions allocate funds to altcoins via regulated products like ETFs, it legitimizes these assets and attracts broader investor confidence. This influx of sophisticated money often reduces price volatility and fosters market stability. Institutional vetting also means altcoins must meet higher standards for transparency, security, and governance, which encourages stronger project fundamentals and long-term value creation. Moreover, partnerships between blockchain projects and large firms amplify use cases, adoption, and developer activity, further boosting demand. The presence of corporate treasuries and hedge funds diversifying into altcoins signals a growing acceptance of these digital assets as viable financial instruments, influencing market sentiment positively. In essence, institutional involvement acts as a catalyst for price growth, increasing legitimacy and opening new channels of market participation beyond retail investors. What this means for retail investors. Should you buy altcoins now? Retail investors face both opportunity and caution in light of growing government and institutional engagement with altcoins. The increased clarity and endorsement of certain digital assets suggest a favorable environment for investment. However, this does not guarantee immediate profits. Due diligence is essential. Retail participants should focus on altcoins with strong development teams, clear use cases, and regulatory compliance, as these factors contribute to sustainability and growth potential. Timing is also critical. Buying during early market adoption phases often yields better returns, but comes with heightened volatility. The increasing participation of institutions may reduce wild price swings, making some altcoins less risky over time. Retail investors should diversify their portfolios, remain aware of global regulatory changes, and use secure platforms. Risks to consider even with government backing and regulatory moves. Government endorsement and regulatory progress do not eliminate inherent risks in altcoin investments. Market volatility remains high as altcoins are still emerging technologies with fluctuating demand and liquidity constraints. Regulatory changes can introduce unpredictability, potentially tightening rules unexpectedly or imposing restrictions that impact specific tokens or sectors like DeFi. Additionally, government support often targets a select group of assets, leaving many altcoins vulnerable to neglect or increased scrutiny. Fraudulent projects or scams can capitalize on hype, and technological vulnerabilities such as smart contract bugs can lead to significant losses. Market manipulation by whales or coordinated groups may also distort prices. Investors must remain vigilant about the potential for regulatory rollback, network outages, or security breaches, and assess each altcoin's fundamentals, market dynamics, and compliance history before investing. How past political moves influenced altcoin seasons. Political decisions have historically played a defining role in shaping altcoin market cycles or seasons. Regulatory clarity or crackdowns often sparked significant price corrections or rallies. For instance, past announcements from political leaders or agencies about accepting cryptocurrencies in national infrastructure or discussing supportive policy tend to boost market sentiment, drawing increased retail and institutional participation. Conversely, bans or restrictive regulations triggered altcoin sell-offs and prolonged bearish phases. Political endorsements, such as government adoption of blockchain or central bank digital currencies, have also ushered in periods of increased experimentation with altcoins, driving innovation and speculative interest. Strategies to identify strong altcoins to hold or buy in 2025. Identifying strong altcoins requires a combination of fundamental, technical, and market analysis. Prioritize projects with robust development activity, transparent governance, and a clear roadmap addressing specific real-world problems. Look for altcoins with active communities and partnerships that enhance adoption potential. Analyze tokenomics to ensure a balanced distribution and mechanisms that incentivize holding. Regulatory compliance and transparent auditing provide added security. Technical indicators, including volume trends and price patterns, can reveal entry points. Paying attention to institutional interest, such as ETF inclusion or corporate treasury adoption, offers signals about market confidence. Diversification across multiple blockchain sectors like DeFi, NFTs, solutions mitigate risk. How White House policies might shape the next crypto bull run. White House policies in 2025 are poised to create a thriving environment for the next crypto bull run by reducing regulatory uncertainty and fostering innovation. By clarifying jurisdictional boundaries, promoting market integrity, and encouraging responsible institutional participation, these policies will enhance market confidence for investors and developers alike. The government's active role in building digital asset reserves and supporting blockchain integration signals long-term institutional commitment, which may attract more capital inflows. Innovations in regulatory technology and public-private partnerships could accelerate adoption across sectors, creating new use cases and investor demand. Increased transparency and protection measures could broaden market participation by mitigating risks. Overall, these policy frameworks lay the groundwork for sustainable growth, helping to transition crypto markets from speculative cycles to mature financial ecosystems with increasing accessibility and stability, setting the stage for a bullish phase. Thanks for watching. If you found this breakdown helpful, hit like, subscribe, and let me know which altcoin you're buying next. Stay tuned for more updates as the White House crypto revolution unfolds. Your next financial move could start right here. Don't miss out. Disclaimer: this video is for informational purposes only and does not constitute financial advice. Always do your own research before investing in cryptocurrency. The market is volatile. Invest responsibly.